Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, Monday, this candle right here on a chart of the S&P 500. After a big down day on Friday, this is Monday, the 8th of June, okay? And yes, we are in the eye of the storm. Okay, I don't think this down move is over. We are still in the eye of the storm. We'll get to that and what I think going forward. And we'll look at a couple of stocks to see why I think we're in the eye of the storm and that the down move is not over yet. Okay. So first we look at the technical picture. It's still bullish, guys. Nothing has really been violated. We haven't broken this low yet on the S&P 500, the 733 level. And I'm still hoping we cover this gap here at 725. Okay. So bullish. And if we look at the moving averages, yes, we're below the 20, but that's not how I measure bullishness or not. It has to be above the 50, and the 50 is above the 200, and they're both rising, so we're still in a bullish formation. Okay, so technically speaking, we are still bullish. What does the sentiment say? We always pair it with the sentiment, fear. Okay, we went flattish today on the SPY, and we're fear. Okay, we're cycling. Okay, remember we said we're not going to be at greed. This is going to take some time before it goes lower. Which means we're not at extreme greed in the momentum. We're at greed, okay, because we went down, but we're still in a bullish formation. Okay, so still, this is exactly what we look for. The breadth was extreme fear. This is good. We're gonna cycle everything into more of a fear move. These options, I'm pretty sure there's a lot of calls that were bought on Friday, but maybe not enough. Maybe we're not at extreme levels yet here. And look, the market volatility is still neutral, and everything else is extreme fear, which means to say that we're at fear, but we're not at extreme levels. We can still go lower. Okay, what I would have liked to see. Okay, let's get to the eye of the storm. We'll put everything together in the eye of the storm and why I think we're in the middle of it, of this down move and not over. Okay, first, let's look at the VIX. Okay, the VIX, yes, it spiked on Friday to 21, above 20, but now it's back down heavy. Okay, and basically the market's flat. It went back down to 18, 19. Okay, now, could we get these? We've had these brief spikes to like 20 after down moves, and they ended there. Like this move right here in June of 2025, we went up to like 22, and then weeks of down move up, one spike or two to 20, weeks of down. Okay, is it going to be one of this? Is it going to be this pattern here? It could be. Okay, but I don't think we're done yet. I think we might even go higher. Maybe we have to go to the between 23 and 28 again. Scare some people, okay, because I don't think we're still past the scary side, okay, because we're just at fear. We haven't really hit the extremes. We haven't really hit, we won't get more bears out there. Could it be like this? It could, but I just think the odds favor we still go down, okay. That's one reason why I think that. Okay, the eye of the storm. The second is that, yes, VIX is there, but I still see a lot of weakness in gold as well. Okay, yes, it sort of went flat today. Okay, but I still see a lot of weakness in the stocks, a lot of weakness in how gold is trading. Okay, and the reason why, okay, they're all related. Okay, I think gold and the SPY are related in this case. We get a bottom in gold. I think we're going to get a bottom in SPY before going up. So that's why I think it's not over yet. Okay, and the reason why I think this is that today, as we spoke on Friday, I was expecting a gap down because we did have bad news. We had Bibi Netanyahu says the war with Iran, Hezbollah isn't over. They're going to start attacking them again. Who knows? Okay, you're getting this war news. So over the weekend, I thought that we would get some kind of like gap down. No. If we had a gap down, I would be more comfortable because that would be some kind of an exhaustive move. Okay, but we didn't. We got a gap up. Not a gap up, but an open up. A gap up would have been here. But we just had an inside open, okay? And we finished at lows, okay? So point number two is that we didn't have that exhaustive gap down. Okay, first is the VIX is not that high. Second is that we didn't get that exhaustive move down, which means I think we're still in the eye of the storm and we're going to continue lower. I need to have some kind of capitulation move lower. We're not getting that. Okay, and we still have Bibi Netanyahu and gold still being very, very weak. Okay, so this is why eye of the storm. Okay, we also had the semiconductors today rebound, almost giving, look at this. On Friday was a big move, and today the SMH opened up back up at the highs. Okay, this doesn't scare any of the bulls. One of these days doesn't scare any of the bulls to like take some off. Okay, we want to have rotation. We still have the the breadth here at extreme fear. We're not getting that rotation. We want to get these guys out. Okay, we haven't had that yet. Okay, or at least, out a decent amount. Okay, there has to be some kind of breadth coming back into the game, and we don't have that. Okay, we still have pressure on the downside. Okay, that's point number 3. Point number 4, okay, maybe I'm getting my points wrong, but the next point is that we still have 2 catalysts coming up this week. Okay, we have CPI on Wednesday and PPI on Thursday. Okay, these are inflation metrics. Okay, and Friday, remember the market dropped on Friday because inflation expectations went up and interest rate hike odds went up. Okay, so if we get the inflation print on Wednesday, this is why I think the market's in the eye of the storm until we get some kind of more news on the inflation front, on CPI on Wednesday. So CPI on Wednesday, if it comes in hot, boom, we're going to get another kind of candle like this, maybe half. Okay, we have to see how the selling is done if we had a hot number. But I think that would be close to the end because the hot number that we're going to get in the CPI and PPI is going to be backwards looking. And if this war maybe puts pressure on Trump to stop the war, which I think might happen soon, if the war ends, then the inflation expectations towards the future will go down. Okay, so we don't care about inflation happening in the past. We care about what the market thinks the future inflation is going to be, the future path towards inflation is going to be. So if the CPI is hot and the market goes down and the war is over, we're going to get that exhaustive move and a move higher after that. Okay, so that's what I think. We're in the eye of the storm. We have these 4 points that are still not at extremes. We talked about the VIX. Okay, we talked about it could be still pretty low. Okay, could it be one of these days? Yes, but I hope it's one of these. Get these market flushed out of there. Okay, the next thing is that we didn't get that exhaustive action down. We still have hope now. It opened higher. I hope this could be it. And then back into the semiconductors. Semiconductors are leading. Okay, we have gold still weak. I still see gold weak. I still see my gold miners weak. I still see weak action, which I need exhaustive action. I need action where things are bad, but my miners are bid, and we're not there yet. Okay, even if we have the chart pattern below the 200, that's great. Okay, but if we get another move lower in the SPY, this thing is going to come down. Gold is going to come down to the 2200 level, 4200 level, an outside chance of getting to the 4000 or 3900 around here. Okay, as the couple of weeks in June, a couple more weeks in June might be the time frame that will get this gold down to here. Okay, so it's all linked. I don't think we have enough pain yet. Okay, but we can just churn around these levels, but I don't think so. I think the CPI is going to be a big thing on Wednesday. So remember, a hot CPI. We'll see how it reacts because we'll see if we have follow through from Friday's inflation scare. Inflation scare meaning interest rate hikes are on the table, higher chances of interest rates, and if the CPI comes hot, it's going to solidify that narrative, more downside. Okay, so that's what I expect will happen. Okay, and we also had news on Apple, right? What was the CNBC here? We had it before. Apple makes big Siri AI reveal. Another clue as to why it's not good, because look, it opened up higher, Apple, went to 317, then finished at the lows. Another sign of weakness, okay? I'm expecting Apple to go back down to here, 28.5, okay? See, we still haven't hit these levels where it would be a good buy and people get scared. Okay, so we want Apple to go down. We want all the SPY to go down. We want it to feel, okay, because if SPY goes down and hits the 50, we're going to probably get to the extreme fear category level. Okay, and it would feel like, extreme fear, but we're still in a bullish pattern because we're still at the highs. We're still higher than the breakout point. Technically, we can retest the lows of the breakout and then move way, way higher. Okay, so the more we exhaust this down move to the downside with more extremes in the sentiment, we have more fuel to go much, much higher. So I'm expecting pain in my head this whole time. When we were at highs, I'm expecting a big move down. I'm expecting a drawdown in my portfolio that's high. Okay, I'm expecting pain. You gotta love pain as a trader. Okay, but I just think that would be an exhaustive move before going higher, right? So that's what I think in going forward. We have a lot of factors as to why I think this is the eye of the storm and we go lower. So yeah, I'm still expecting that. I'm still expecting CPI to be another catalyst towards the down move first. Okay, if not, if we get the CPI colder than expected, maybe it provides some relief, and then we get a relief on the war front, boom, we can get all-time highs from here. Okay, but I just don't think, I think it'll be a bigger move to the highs if we start exhausting more of these longs. Okay, we got to get this put call ratio down to like at least fear. Okay, because it's lagged. Maybe on today more puts were bought. I know Friday a lot of puts were bought. So we have to get, I would be more comfortable if conditions were more extreme to the downside. Okay, get out of the eye of the storm, more storm, hit a technical level, maybe hit the 50, maybe hit this 725 gap, and maybe even go down to the 700 level. That would be devastating. That would be a lot of people would feel some pain. Okay, so that's what I'm looking forward to. Eye of the storm, not over yet. Expecting more of a down move. Okay, let's see how this week materializes, guy. We have some catalysts coming up. All right, later.